Free healthcare, free college, free basic income. With a presidential cycle just starting up, all these politicians are talking about free everything. But the question is, how are we going to pay for it? And what is it going to do to the economy? As investors, what should we be doing to protect and grow our wealth? All right, those are things we're going to discuss in this video. And understanding these things are going to put you in the 1% of people that are prepared to succeed as all this stuff happens. So stay tuned. Welcome back to the Market Disruptor Show, where we talk about investing, specifically in cryptocurrencies and disruptive markets. We are going to tackle a pretty big subject. As a matter of fact, it's so big, we're going to break it into 2 videos. This new monetary experiment. You have all these would-be hopeful politicians looking to get into office. And at the end of the day, all politicians are buying votes. They're all promising you something: better schools, better roads, better trade agreements, whatever it is. And they're trying to buy your votes with that. Some of these politicians are straight out trying to buy your votes, like actually with money, where it's like, we're going to give you free college and free healthcare and free basic income and all these things. Or I'd imagine most of you guys know that actually just this week we surpassed the $22 trillion of debt. For those of you guys that run a household or a business, you know that it doesn't work. So how are we going to continue to add programs? How are we going to pay for all this stuff? And that's where this great monetary experiment comes into place. So what they're proposing in this experiment, what you're hearing these politicians talking about, is that they can do this without needing to raise taxes. The debate is raise taxes on the rich, don't raise taxes, tax cuts, whatever. You never hear them talking about cutting spending, right? In our own household, we don't talk about, let me go get 5 more jobs. We talk about cutting spending. They're talking about this new way where we can get all the money we need to pay for all these things, and we don't have to worry about taxes. All they have to do is just print more money. Why not, right? Before we get into this new monetary experiment, you have to understand the experiment that we've been in for about the last 10 years, and it's called QE, or quantitative easing. And this is what we've been doing since 2008. And basically what it is central banks buy bonds or securities in the market to increase liquidity. So basically, the central banks are separate from the government, and basically the government produces debt or bonds, and the central bank just prints money to buy them. And not only do they do that, now they've started to actually go into the markets and buy stocks and bonds of private companies. And they're just basically printing money, putting it directly into government and bank and Wall Street debt. That way it goes right to where supposedly that liquidity crisis was in the credit markets. And they're injecting it there because they're trying to free up that liquidity, hoping that as these banks get that liquidity, then it starts trickling down into more and more loans. Since 2008, they've added over $4 trillion. $4 trillion. So to put this into perspective, it took 235 years of the United States to get to $1 trillion of debt. The little guys, the middle class, they're still not getting the money. The rich seem to be getting a lot richer, but the little guys aren't. And so they say, well, the problem is that QE isn't working. And so we have this new experiment that we want to do. It's a new monetary experiment. You may have heard the Green New Deal. That's one's going around right now. But they're also talking about universal healthcare, healthcare for everybody. They're talking about free college for everybody. They're talking about forgiving college debt to everybody. And they're even talking about universal basic income. As a matter of fact, I saw last night on Twitter, a new presidential hopeful said that why not just give $1,000 to everybody? Shouldn't be a problem. We should give $1,000 a month to everybody. And really it all boils down to something called MMT, Modern Monetary Theory. Modern Monetary Theory, MMT, so we'll just call it that. Now, Wikipedia defines MMT as a theory describing currency as a public monopoly and unemployment as evidence that the monopoly isn't working or it's restricting the supply of the financial assets needed to pay taxes and satisfying savings desires. What that means is the government runs a monopoly on currency, and citizens must pay their taxes in that currency. Therefore, the currency supplies its own demand. Markets move off supply and demand. So what they're doing is, if nobody else will demand those dollars, we will create demand. If I really want to break it down, what it is it's allowing the government to do unlimited spending. So right now, we pretty much have unlimited spending. However, they have to borrow the money. So what they want to do is just say, you know what? forget it. Let's just allow the government just to have unlimited spending and they can just create more. And that will solve all the problems. Now we don't need to go get more debt. We'll just print our own money. And that way it's not limited to the taxes. Taxes are revenue to the government, right? So we pay taxes and then they're supposed to spend that $3 trillion on whatever policies they want. We know that they're spending more than they're bringing in. However, they still kind of play that dog and pony show where it's like, trying to balance the budget, so to speak, and whatnot. Part of the reason why they think this is a good idea is because with QE, the quantitative easing, we printed, like I said, over $4 trillion in the last 10 years. And supposedly we didn't see massive inflation. I know gas has sure gone up a lot. Really, the QE was for Wall Street. It went to free up the credit markets. The problem is that it never really made it down to the economy. That's why it didn't really affect the overall inflation like it should have. I mean, $4 trillion should have seen massive inflation, but we didn't see that. But MMT, which we're talking about now, is for Main Street. So what they want to do with this is they want to bypass the credit markets, bypass the banks, and they want to have the government, the treasury, print money directly and send it right to the public. So it skips the top class and it goes right to the bottom. It goes straight to, like I said, the free college. It goes straight to paying for healthcare. It goes straight to paying for jobs. It goes straight to paying people to not have jobs. Just because that may be good for me, it may be good for you, it may sound really nice, we have to understand the implications of what that means. It has to come from somewhere, right? Think about it like a balloon, right? A balloon, it inflates, it gets bigger. So the more money we put in the economy, it inflates. It leads to inflation, or even what happens is eventually it leads to hyperinflation where it starts running away really quickly. Like take college tuition, for example. As soon as the government started giving everybody loans, there was more money going towards colleges. And guess what? Colleges are way more expensive than they used to be because there's all that extra money going in there. The proponents of MMT say, yes, you're right, it will cause inflation. So they're not even arguing that, which is kind of strange. But the reason why they don't argue that is because they have a solution. So the solution to MMT's inflation is taxes. But imagine like a bathtub. And I start, as I'm printing money, I'm filling that bathtub up with money. And eventually it inflates so much the money is spilling over the bathtub. What do? They just pull the drain out of the bottom. And so they'll put money in and then they'll tax money out, and that's how they want to control it. When that tub's running over, what that means is that the economy is exceeding the capacity, right? It's producing more. But in this case, the government, like I said, they just wanted to remove those dollars by taxing them out of the system. And it's just way different. So the Federal Reserve, their job is to control inflation, control the economy with inflation. And they do that by the monetary supply, but also through interest rates. So they lower interest rates to try and stimulate the economy, and then they raise interest rates to try and slow the economy back down. But these MMT proponents say that, oh, we don't need that anymore. We're not going to do that anymore. Let's just put interest rates to zero, and let's just keep them there forever. And we won't use interest rates anymore. We'll just put more money in, and we'll just take more money out. And that will be the solution that we'll do. And they think that sounds like a great idea. Now, if we leave interest rates at zero, it starts to mess up the entire economy. See, the markets are supposed to be free. They're supposed to be moving off of supply and demand. So what happens is when there's a lot of people that want to borrow the money, there's only a limited amount of money to borrow. There's more people that want to borrow it, so interest rates go up. As interest rates go up, less people borrow. All of a sudden, too low of people start borrowing, so they lower interest rates and they start going back up again. And it creates this supply and demand. But when they just artificially put them at zero, well, then everybody borrows, and then you get all kinds of like malinvestment, bad investments, things like that. Things like we saw with the housing bubble. Where is all this headed? Are there any other solutions for this? So that's it for today, but tune in next week where I'm really going to break this down, and I'm going to talk about, like I said, as investors, what we're going to do, how we're going to position ourselves for this. Hopefully you like that. If you do, give me some thumbs up on that. If you like free stuff, give me some thumbs up on it. Otherwise, give me some thumbs down. If you don't like the video, leave me comments down below. Let me know why. I'd love to discuss that with you. And that's it. To your success. I'm out.